We are at noon, so we are going to go ahead and get started. Again, as people are logging on, thank you for joining us this morning and this afternoon. With me is Robert Barron. He is going to be introducing himself along with our special co-host Elizabeth, and we'd like to also thank Megan Todd for putting this webinar program together. So Robert, if you want to go ahead and officially introduce yourself, and then we'll go ahead and get started.
Great. Thanks, Ryan. Good afternoon, everybody. Thanks to Ryan and Elizabeth and Megan from ALEI. We appreciate your participation today. As Ryan noted, my name is Robert Barron. I am the Associate Commissioner for the Property and Casualty Division at the Maryland Insurance Administration. My contact information is on this title page of the presentation here. And you can always reach out to me with questions about anything in the property and casualty insurance space, whether it's around your business endeavors or your personal insurance needs. Most of the time I answer my own phone and definitely always respond to emails. If you've got a question today or down the road and it's something that we don't have an immediate answer for you, we'll get back to you with an answer promptly. For those of you who are not familiar with the Maryland Insurance Administration, I'd like to start this afternoon by sharing a little bit about who we are, what we do, and what we don't do. You could advance to the next slide. So the Maryland Insurance Administration is an independent state agency, and we get that phrase independent state agency because we are an agency of your state government that doesn't cost the taxpayers money in out of the general fund, operating fund of the state. All of our budget comes from the taxes and fees that are assessed on the insurance industry. We're charged with regulating Maryland's $28.5 billion insurance industry. Some of the things that we do are we issue licenses to insurers and producers. That word producer is sort of an industry term, it basically just means an insurance agent or an insurance broker. So somebody who engages in the sale of insurance policies. We examine the business practices of our licensees to ensure compliance with Maryland insurance laws and regulation. Our licensees are not just insurance companies, not just insurance producers, agents, brokers, but there are other individuals and entities like public adjusters, premium finance companies, and a host of others who engage in the business of insurance in the state. And so we do have regulatory authority over all of those individuals and business entities. One of our most important, if not the most important function of the Maryland Insurance Administration, along with all of the other state departments of insurance around the country, is that we monitor the solvency of insurers. So it is your state insurance departments around the country and what are called the state insurance guarantee funds that make sure that when you have a claim, your insurance company has the money to pay it. Really important part of what insurance regulation is all about. We review and approve insurance policy forms and rates. And so a common misconception is that the Insurance Administration is the one who that we're the folks who decide how much you pay for, let's say, your automobile insurance or your homeowner's insurance or whatever it might be. And that's not the case. The market sets premiums, and we have a competitive market here in Maryland in almost all of our insurance lines of business. And so we review rate filings. Insurers have to tell us what the rates they're charging are. But we don't set those rates. The market does that. We do, though, review every single insurance policy that is sold in the state. And before it can be sold, it has to pass muster with us to make sure there's nothing in there that is not in compliance with Maryland law. And then we also we investigate complaints from consumers and providers. We have an insurance fraud division that reviews allegations of insurance fraud. And those are our primary functions. But in addition to these core operational areas, the Insurance Administration also serves as subject matter experts to the legislative and executive branches of state government. We're available year-round to consult with all stakeholders about all insurance matters. So I'm on the P&C side, property and casualty side. That's what we're going to be focused on today. We also have the opposite side of the aisle is the life and health insurance side of the aisle. We'll touch only briefly on L&H today. But in the today you're here because you have some level of interest in farming or agriculture-related businesses and the insurance needs that are associated with that space. And so in the property and casualty world that I inhabit, it's really diverse. It's a really wide range of subject matter that falls in the property and casualty universe. And likewise, farming and agriculture is also a very diversified space. You've got everything from gentleman farms to huge commercial farms, everything in between, family farms, things like wineries, corn mazes, petting zoos. All these things kind of fall in that agriculture, or some people call it agritourism space. And so it's a pretty diverse set of subject matter. But despite this diversity, most of the insurance needs that you all face will fall within the property and casualty spectrum, and hopefully I can provide you with some property and casualty basic knowledge today that each of you can apply to your individual business endeavors. So let's take a quick look at our agenda for the day. We're going to talk about risk tolerance and mitigating risk, and some of the most important fundamentals of property and casualty insurance, with a focus on farming and agricultural businesses. We should have time at the end, like Ryan said, for Q&A, but feel free to use the chat box if you'd like. As a final note, I will, final introductory note, I'll try to avoid using any highly technical insurance terms without providing an explanation. But if you hear me speak a term or provide an explanation that you are completely unfamiliar with, either put it in the chat box or just interrupt, and I'll be happy to try to break that down a little further. But any conversation about risk and the like should start with an understanding. Any conversation about insurance should start with a conversation about risk. And so we're going to move to that now. Ryan, next screen. And so the term risk has different meanings for, depending on your perspective. So for a business person or for any consumer, at its core, the meaning of risk is the uncertainty of a future financial loss. And so that's, of course, why people purchase insurance, right? You're trying to offset that, that uncertainty. Insurance companies use that word risk to, in a couple of different ways. They use it to describe the insured entity or the policyholder, and they also use it as a reference to the perils or the covered causes of loss that insurance policies provide benefits for. So for example, if there's 20 people listening in on this call today, and each of you owns or operates a farm, let's say, and you're all insured with the same insurance company, right? You all collectively would represent 20 distinct risks to the insurance company. It'd be 20 different insurance policies involved. And even though each of you owns and operates a farm in that example, and you may present similar risk characteristics, so your farms may be similar in size, maybe you are growing the same crops, even though all of that is true, each of you are going to have a different premium from one of you to the next. And that's because those risk characteristics, while similar, are not going to be identical. And even more importantly, each of you as a policyholder, you're going to have your own unique tolerance level for risk. And your risk tolerance level is going to inform your choices when you purchase insurance coverage. And so when we talk about this risk tolerance level, it's a very individualized metric. It's influenced by a host of different factors. And for example, are you financially conservative, or are you more of a gambler? Is your operation, well-funded, well-capitalized, or are you operating on a shoestring? And so risk tolerance is all about how the uncertainty of future financial loss affects you and how you deal with that. And some of you may be particularly prone to worry, and you lie awake at night thinking about those risks. And others may be a little bit more psychologically able to, to put that off into a bucket and close the door and not think about it until something goes wrong. But we want to talk some about risk mitigation, because that's the piece that can, if you are one of those people who loses sleep about your risk tolerance level, what you can do to offset that a bit is work in the area of risk mitigation. And so this process known as risk mitigation should be, and this isn't unique to farming, it's really for any commercial enterprise, but it should be a continuous process where you're developing and refining standard operating procedures that are focused on evaluating your risks in real time as they change, and taking steps on your own to reduce your risk of loss. So risk mitigation is all about establishing best practices for operational areas like worker safety, equipment maintenance, storage, premises maintenance and security, system security, just to name a few. This continuous risk mitigation program that I'm talking about is really essential to your success as a business owner or operator. Many insurance companies employ risk mitigation professionals who are there to work with you and in order to optimize safety and reduce the risk of future loss. And if you participate in some of those programs with your insurer, it may even reduce your insurance costs, because many insurers will offer premium discounts for participation in risk mitigation programming. But even more important maybe than the dollars you might save by working with your insurer and their loss prevention people is that there is a unmeasurable savings that you can realize because you took the time to establish and create a risk mitigation program, and that program prevented a loss from happening in the first place, right? So let's say you install sprinklers in a building, and a fire starts, and the sprinklers put it out and control the damage to the point where you don't even have a claim. That's just one example of how risk mitigation, can help. So you can and you should devote some concentrated effort and resources into this creation of a risk mitigation program. That said, no amount of risk mitigation investment that you can make can completely eliminate your risk of future loss. Not all risks are foreseeable. Not all risks can be insured against. But that's where your insurance program can assist you. If you carefully evaluate the risks associated with your business, you gain an understanding of your risk tolerance level, and you find a licensed insurance producer or broker to work with who has experience in your specific niche, then you'll be able to manage your risk effectively. So before we take a look at what an insurance package might consist of for your specific business, let's just talk a little bit at a high level about the market in Maryland for farming and agriculture insurance. So next slide. We can break the overall insurance space into two large markets, just to kind of put them in categories. One we call the admitted market. We'll talk about that first, and the other we call the non-admitted market. And I'll give you a brief explanation of that in a moment. But all that the admitted market means is these are the insurance companies that we have licensed. The Insurance Administration has licensed to operate in Maryland. Some of them may be domiciled here in Maryland, and others may be domiciled elsewhere in the country. But they are all licensed by us. They have from us what we call a certificate of authority, and that enables them to legally sell their products here in the state of Maryland. This list of, I don't know, 12 or 13 companies on here. These are the largest writers in the farm insurance market space here in Maryland. Brethren Mutual happens to be a domestic company. They're domiciled here in Maryland, out in Western Maryland, and they're our largest writer of farm coverage by market share here in the state. All of these companies have a sizable, well, they all have a decent piece of our market share here in Maryland for farming, agriculture, et cetera. And so the question becomes, you've gone to try to purchase insurance, and you've looked at these 12 or 14 companies, and for whatever reason, you can't get a policy. And I'll talk about what some of those reasons might be. But what if these insurers won't sell you a policy? Next slide, Ryan. That's where the non-admitted market, which is also referred to as surplus lines insurance, can come into play. So what is a non-admitted insurer? Well, a non-admitted insurer is not regulated to the same degree that we regulate the admitted market, but they are allowed to sell their products here in Maryland. And if you can't get coverage in the admitted market, the surplus lines space might be an alternative for you as opposed to going without insurance altogether. And so you get coverage from a surplus lines insurer through what's called a qualified surplus lines broker. QSLB is the acronym that we use for that around the Insurance Administration. And these are licensed brokers, licensed by us, who have relationships with the non-admitted market and can offer policies for non-admitted insurers. We have limited regulatory authority over the non-admitted market, but on the plus side of that, if you have a claim with your non-admitted insurer and you don't like the way the claim is going, we do have full claim-related authority over the non-admitted market. What we don't have authority over is their underwriting practices, their pricing practices, which should not deter you because the surplus lines market may be more or less expensive than the admitted market, depending on what you're purchasing. And the other piece that is that differentiates the non-admitted market from the admitted market in, I guess, in a bit of a negative way, is that I mentioned earlier how important it is for us to monitor the solvency of insurers, and that's limited to the admitted market. And when an admitted insurer, it's rare, but when an admitted insurer goes out of business, there is a guarantee association in place to make sure that the obligations of that company get taken care of. That doesn't exist in the non-admitted market. So if you're with a non-admitted insurer, and this would also be exceedingly rare, but if you were with a non-admitted insurer who did go out of business, you'd become a creditor of that estate of that insurer. You wouldn't have a state fund that you could go to get your reimbursement. Next slide. All right, so now we've talked a little bit at a high level about the marketplace. Let's look at what an insurance package for a farming entity might look like, and how you can go about putting together, a package for your particular business. So one question we hear all the time at the Insurance Administration here is, how do I find an insurance company or an insurance producer? Or can you recommend an insurance company or an insurance producer? Unfortunately, because of our role as the regulator of the entire industry at large, we can't recommend a specific insurance company. We can't recommend a specific insurance producer. But we do offer some tools and tips to assist you in your search for either an insurance company or an insurance broker. We have a great website. We'll put that website up at the very end here today, but on our website, you'll see that we've got brochures and we've got videos about shopping for insurance. We have brochures and videos that are geared directly to farm insurance. And you can also check to see if a particular insurance company or insurance agent, broker, producer, et cetera, is currently licensed and in good standing. It's just a question of typing a few things into search screen on our website, and you can get that information. You should always work with a licensed insurance producer or advisor when you're looking to meet your coverage needs. And it should be a producer or advisor who has experience in the type of risk that you present. So, if you're a winery, you're probably better off with with a producer who has other clients who are in that space than maybe somebody who, I don't know, grows cover crops, right? So both in that farming umbrella, but the more experienced your producer is in your specific niche, the better off you'll be. And when looking for that producer, because it can be hard to find, a couple of suggestions are ask your, if you have no insight on where to go, of course, there's always Google, right? Everything's in Google. But ask your personal insurance, your homeowner's insurer or your auto insurer, if they write commercial coverage, because many of them do. Many of these are large multi-line insurance companies, and they write personal lines, they write commercial lines, they may write farm, or they may have hybrid products that can meet your needs. So you can start there, and if not, ask that same individual if they have a referral to somebody. And so the other really good tip for finding a producer to work with is you probably know who your competitors are in your space. Maybe some of them are friends, maybe they're not, but you know who your peers are, and there are often peer groups and trade groups, and that's a great resource to try to locate a producer. Ask these folks who they're working with. If they've had a successful relationship, that people are usually willing to share that. So when you're looking at your insurance package and the types of coverage that you need, you can see a list here on the screen, but these are some of the lines of business that you need to consider. Workers' comp, commercial property, equipment, premises liability, employee crime, life and health, commercial auto, general liability, business interruption, cyber. I'm just going to touch on a couple of these real quick before we move to the next slide. Workers' comp is a really important thing because it's one of the few types of insurance that in many instances it's mandatory for you to have workers' comp coverage. So if you have any employees, even a single employee, you've got to have a workers' comp policy. Now, if you're a sole proprietor and you have 0 employees, you are able to opt out of the workers' comp system. You do that through the Workers' Comp Commission. You go to their website. You have to fill out a form that says you're a sole proprietor and that you're affirmatively opting out, and you can do that. But if you have even a single employee, workers' comp is mandatory, and you don't want to try to skirt that obligation for a lot of obvious reasons, but primarily if something goes wrong and that employee is injured, the fact that you didn't have insurance is going to put the responsibility directly on you, because the Workers' Comp Commission is going to take care of that injured worker through the Uninsured Workers Guarantee Fund, and then they're going to come to you as that uninsured business owner for reimbursement. And insurance is a much more efficient and effective way to go about that. I put life and health up here real quickly, just because even though I'm a property and casualty guy, if you are in a business and you've got partners in your business, you can use life and health insurance to guarantee the continuity of your business in the event you or one of your partners, unfortunately passes away, right? So you have a way to make that work. But we're going to talk about some more of these, but let's, so I saw that chat question, and I'm gonna, the question is, does workers' comp apply to all employees, including 1099s? So for a 1099 employee, a subcontractor, if your subcontractor is insured for workers' comp and you document that, you may be able to exclude his payroll from your business's workers' comp premium calculation. That's the kind of thing that you really need to vet with your insurance producer and with the Workers' Comp Commission. Don't just take somebody's word for it that they have workers' comp coverage when they're a 1099 employee. So good question there. Let's move to the next slide. All right, so we've looked a little bit at these types of coverages that you may need at a high level, but I want to look just a little closer. at some of those things. So home and other structures, if you're a farmer, you may live right there on your farm, right? You've got a farmhouse, and that may be your primary residence. So you can get a homeowner's policy for that residence, but you might also be looking for a policy that will cover both your farm and your farmhouse, right? Your farming operations and your farmhouse. And there are different ways to structure that depending on what kind of farm you have and who the insurer is. It can be done with separate policies. It can be done with a package policy. It can be done with endorsements. There's a lot of ways to accomplish that, and your producer will help you with that. But you just want to be sure that if you're living in the home that where you also have your farming operation, that both your personal exposures and your business exposures are contemplated. Personal property versus business personal property. So, let's use that same example of you live in the farmhouse on the farm. Maybe in the farmhouse, you've got an office dedicated to keeping your books and the like. You've got a computer in there and that's your business stuff. You want to make sure that that is contemplated and covered in the package that you put together. If you've got vehicles that you're using on your farm, and farming vehicles have some exceptions in the transportation code for the requirements to put tags on them, right? So these may be vehicles that have regular Maryland registration plates, or maybe they don't need to be registered that way. But you've got some liabilities associated with those vehicles, and you want to make sure that your package is covering the vehicle themselves and the liability that might arise from if you have an accident with that vehicle. Same is true for your tools and equipment. If you've got a component to your operation where you've got like a produce stand, right? And you are holding on to cash receipts. Of course, you want, as part of your risk mitigation plan, you want to be super careful with where you keep that cash, but you also want to make sure if you're holding on to sums of cash that you've got cover for that, because most policies are going to set a very low limit for cash coverage that you probably need to purchase more of if you have that exposure. Inventory, stock, crops and livestock, you want to think about sort of as a separate thing in your package and discuss that with your producer, because while there is cover available for crops and livestock in the admitted marketplace here in Maryland, the more common place to get that coverage is from the federal government and through their crop insurance program. And so you want to be aware of that. And flood is the same thing. So flood insurance, we have some cover available in the admitted market here, but the bigger availability of flood insurance is through the National Flood Insurance Program, a federal program, which is regulated by the feds and not by us at the state level. Let's kind of move on and talk a little bit about claims. And let me tell you what the biggest source of frustration, policyholder frustration and confusion that we see in the aftermath of a claim, that we see all the time. Something bad happens, you've got a claim going, and most policyholders, and this is not true just of farmers or commercial policyholders, just throughout insurance, they don't recognize that the obligation to prove your claim is on the policyholder. And so just kind of think about that as we're moving through this. You can avoid some of that frustration and post-claim stress by including some important things in your risk mitigation plan and knowing ahead of time what your insurer is going to want from you in the aftermath of a claim. These may seem like common sense, but they're really important, and they are, how do I say this? They are so frequently not paid attention to. So before you have a loss, even before maybe you go to speak with your producer, but when you're putting together that risk mitigation plan, take photos and video of your operation. Just walk your property, walk through your buildings, your equipment. Take videos, take photos, take snapshots. Everybody's got a smartphone, right? Doesn't take long to do this. Take snapshots that show the serial number, that show the brand name or the model number. That photo and video inventory will go a long way towards making your post-claim process smooth. Maintain that inventory with original purchase information. If you don't have that, get those good, clear images of what it is that you have, and keep that inventory in at least 2 secure locations. Really important that you do that. It doesn't help you to have an inventory on paper, if it burns up in the fire that, that took place. So keep that inventory in at least 2 secure locations. Generally 1 off premises, give it to a trusted friend, put it in a safe deposit box, that kind of thing. So let's talk about after a claim, and actually before we get to after the claim, one more thing, I want to talk about deductibles real quick. When you're making your coverage selection, we have talked about your risk tolerance level, and your choice of a deductible is probably going to reflect that. If you've got a low risk tolerance level, you're going to want a low deductible. If you've got a higher risk tolerance level, you may put up with a higher deductible. The calculation that you make is this: the higher your deductible, the lower your premium. The lower your deductible, the higher your premium. And so, insurance is a unique product. You need it, so you buy it. And then your fervent hope is you never have to use it. And of course, when you do need it and you use it, the next thing that's going to happen is they're going to charge you more for it. So it's a little bit of an unfortunate thing, but ask yourself this question when you feel frustrated by that concept. In the aftermath of a large loss, where your business is literally at risk, that insurance package that you put together is going to be the thing that hopefully helps your business recover. And in the absence of that, insurance can shut your business down. So discuss your deductible choices with your producer. After a claim takes place, you need to provide prompt notice of the occurrence to your insurer. You've got that damage, you've got that pre-loss inventory we talked about. Now you're going to embark on some new documentation effort. You're going to document the damage. So now you're going to take photos, those same things that you photoed when they were pristine and in good working order. Now you're going to take photos and video to actually show the damage that has taken place. And you're going to want to be able to provide that all to your insurer. If your loss happens to be something that involves theft or vandalism, that also needs to be reported promptly to the police, because that's a condition of your insurance policy. After a claim happens, the other really important thing, if it's a property claim, is choosing a contractor to make repairs or rebuild, and always look for a licensed contractor. We have a brochure on our website about how to choose a contractor. Look for somebody who either you're already familiar with or you comes highly recommended. And you can, just like you can check our licensees with on our website, you can check a contractor's licensees on the Maryland Home Improvement Commission's website. Make sure you understand the difference between actual cash value or ACV loss settlement and replacement cost value settlement. Replacement cost value is sort of like, sounds like what it is, which means if something is a total loss, let's say it's, you've had some kind of a fire loss and your computer, burned up. Replacement cost value coverage is going to pay to replace that with a new item of the same, quality, right? Without any depreciation. Actual cash value coverage employs a depreciation factor, and your vehicles and your equipment are generally going to be covered at ACV. And so in other words, if your 22-year-old tractor that was operating fine is damaged beyond repair, you're not going to recover the loss, the cost of a brand new tractor. You're going to get something less than that, unless you've purchased, and it's out there, but you can purchase stated or agreed value coverage. Let's go to the next slide and talk briefly about your liability insurance coverage, because it's as important as your property insurance. When you're putting together that insurance package with your chosen insurance producer, you want to think about your general liability coverage, premises liability. So whether you have a retail operation or not, you still likely face the risk of people coming on your property. And so you've got liability concerns from that. If you're producing or selling your product, you've got potential for products liability. And we talked about vehicles a little bit, in addition to covering the risk associated with damage to the vehicle itself. You want to have coverage for your risks. If you've got to take your pickup truck that you use on the farm, you probably also take it out on the road. And if you've got an accident, you need to make sure you're covered there. And so next slide there, Ryan. So what happens if something goes wrong and you get sued? That's where your liability insurance comes into play. Your liability insurance provides two super important benefits. It's the defense benefit and the indemnification benefit. And put simply, if you get sued, unless the lawsuit is the result of an exposure that's not covered by your policy, you are going to have a lawyer defend you, and that lawyer is going to be selected and paid for by your insurance company, and that lawyer's job is to defend you, not to defend the insurer. But your insurance company will pay for that. And the indemnification piece is, so you've been sued, maybe you have a retail operation and somebody tripped and fell and and broke their leg or whatever the case might be, and you've been sued for that. Lawyer is going to defend you, but there's every likelihood that that claim is ultimately going to settle, right? There's going to be a payment made to that person, and that's the indemnification benefit. And your policy is going to pay for defense and indemnification. Important to recognize that indemnification, that money pays up to your policy limit. So if you've got $1 million liability policy, you're going to get up to $1 million of coverage for the indemnification benefit. The defense benefit it's in addition to, it's outside of the indemnification benefit. So if you get sued and the claim ultimately settles for $100,000, and you had a $100,000 liability limit, but you also have $25,000 of legal expenses that were incurred while that claim was being defended, you're okay, because that $100,000 indemnity benefit will pay the indemnity piece, and the defense piece is outside of that. When you are putting together your package, talk to your producer about your operation, what kind of products you have, what kind of interactions with the public you have, and find out what types of exclusions are within the policy. In other words, what's not covered. That's what we mean by a liability exclusion. And if there's something that's not covered in the base policy, you can inquire about getting coverage for that in through an endorsement or through another type of policy. Next slide. Yeah, so covered a lot here in a fairly short time. I hope it was useful and good relevant information. We have some time for Q&A. Right before we do that, just point out some of these resources that are on here. That first website is our website, the Insurance Administration's website. When you have a few minutes, take a look at it. It really is a excellent resource for all things insurance, not just in your business area, but your personal insurance needs as well. MDA is the Maryland Department of Agriculture's website. Open.maryland.gov is a website of the executive branch that is all about catering to entrepreneurs who want to get up and running in the state of Maryland. So you may find that useful. It's the same with the Commerce Department's website. And the last website on there is the Workers' Comp Commission. So all things workers' comp claim related go to the Workers' Comp Commission. And so their website is there for you as well. Brian, I feel like I saw at least one question pop up in the chat that disappeared real quick. So if there's
I was going to go back to the slide. So the question was from one of our guests. So for the liability coverage for farmers, they asked if doing agritourism, which of these liability coverages would apply, or do all of them apply?
Really good question. And chances are all of them. I mean, if you don't have any vehicles associated with your exposure, then you don't need motor vehicle liability. But general liability, premises liability, I'm just going to assume when I think of agritourism, I'm thinking about, those things like I mentioned at the top, whether it's a petting zoo or a corn maze, a pumpkin patch, hay rides, all of those kinds of things where you've got members of the public coming onto your property. And so for sure, GL, general liability, premises liability. And if you've got anything that you are handing out or that you are creating that is either that is for sale, products liability is also likely needed.
Robert, I was going to ask a question, real quick question. I think we have another one in the chat, but
how is the process if an insurance company doesn't pay? So that's a great question from Saror. And
yeah, go ahead and answer that one.
In my division here at the Insurance Administration, I sort of briefly touched on this early on. We handle consumer complaints. So if you find yourself in the claim process for any line of business, whether it's your auto, home, your farmer's policy, whatever, and you've got a claim that's not going well, reach out to us. You can go right on our website, click on the file a complaint online link, and you'll type in your information. We will put that in our system. We will interact with your insurance company. And on every one of those complaints, and my complaints division handles, maybe 6,000 or 7,000 consumer complaints a year. We always issue a written determination. We will tell you, we get a lot of positive outcomes, not always, but we'll always tell you what the outcome is, why it is. And even if it doesn't go your way and you're still unhappy, we have a hearing, an administrative hearing appeal process that you can avail yourself of.
Yeah, the next question was, have you come across field day situations where farms have community members participate in cultivation or planning? How do these fit into insurance?
Another really good question. And yeah, we do see that. So another division we have here at the MIA is, we call it CEAU, Consumer Education and Advocacy Unit. And they are out and about at functions in the communities all across the state, literally every day. We do hundreds and hundreds of those a year. And we do see these kinds of events where, planting trees or coming on a property to help with cultivation. It really is a case-specific scenario, right? So if you're an organization and you're actually sponsoring one of these kinds of events, you may need as a supplement to your regular insurance package, what we call event insurance. And that's something else that your insurance producer can find for you. The other piece is, we've seen some instances on the shore where farmers are using volunteer with their labor on the farm. And that's a really, it's not necessarily a bad practice, but it is a practice that does come with some risk level. So you have to clarify whether there's a chance that maybe you're not paying those volunteers, but could they possibly be considered employees? So if somebody gets hurt in that situation, should you have had, or did you have a workers' comp policy that they could avail themselves of? And so anytime you have an event, or as part of your operations, you're bringing people onto the property, that's the kind of thing to let your producer know about upfront. And if it's a new, if it's something you're adding to your operation, right? You've decided to have one of these events for the first time, speak with that trusted insurance advisor first. Get those T's crossed and I's dotted before you start that kind of event.
Next question from Robert. So could you speak a little bit more about private property versus business property when operating as an LLC, but personal vehicle is used, part business use, part personal? In the event of a claim, the farmer will be sued as his LLC and as his personal entity. How is this best covered? What is the best way to cover this? It's a great question.
Yeah, it is a really good question, and I'm going to give you some information, and I don't want to sound like I'm passing the buck. But what I really have to preface that with is that's a really, again, case-specific kind of legal question, and we can't provide legal advice, right? So, but that said, let's talk about because you've got some stuff in there that I can address. So private property versus business property. So I'm not sure if you're talking about contents or the premises, right? But if you're talking about contents, so your personal content property, that you're covering under your homeowner's insurance or your renter's insurance, and it's going to provide very little cover for any property that you also use for business. So that, like, we'll use that example from earlier. If you've got a computer that's your personal PC, but you've got on there, you're keeping the books for your business. So it's sort of a hybrid, and your homeowner's policy is going to have some limitations as to how much it will pay because it's got that business piece in there. So you're probably going to want to consider that with your business insurer also. And then the other part is about the vehicles. And so if the vehicle is licensed to a person rather than an LLC, that person who it's licensed to is required to hold a motor vehicle liability policy by the state. And whoever that vehicle is registered has to have that policy. And if you're using the vehicle, this is really important. If you're using your vehicle for both your personal use and some business use, let your automobile insurance company know that, because you don't want to be in a position where an accident happens and that business use prevents you from getting the coverage that you thought you had. You cannot, people do this all the time. We see it all the time. It's what is known in the business as a material misrepresentation. For example, if I drive for Uber part-time and I've got my auto insurance with, company X, and I haven't told them that I'm an Uber driver, and I go out and have an accident while I'm driving for Uber, all kinds of liabilities arise there. So make sure that the key thing is just disclose, over disclose. Let your insurance producer know what you've got going on.
Oh, awesome. Thank you for that, Robert. I did have one other question for you, and this was a question I wanted to ask about. I'm not sure if you talked about umbrella policy coverages. I didn't know if maybe you wanted to talk about that real quickly and mention what that's about. I know that's a big deal, especially for farms and farm management programs. So wanted to see if maybe you could just briefly discuss what that's about.
Right, Ryan, that is a great question. And yes, and in fact, I had it in my notes and I went past it. So yeah, so your umbrella policy is a liability. It's an additional liability protection above and beyond. So let's say, if you can go back to that liability coverage screen real quick, where I have 4 bullet points.
Yeah, give me 1 second. I'm going to pull it back up.
While you're doing that, so if you, go down to the liability one. Yeah, that's it. Great. So let's say you've done a great job of putting together your package, and you've got general liability coverage, you've got premises liability, you've got products liability, you've got motor vehicle liability, all of which you need. And I'm just going to make a real easy example here. Let's say you have $500,000 of coverage for each one of those, right? And, maybe you're concerned that, that $500,000, while it's a lot of money, might not be enough in a catastrophic loss, right?
Yeah.
So you can buy an umbrella policy, and an umbrella policy, it sort of is what it sounds like. It sits above, it sits over top of, it covers you above and beyond your underlying coverage limits. And so if you've got that $500,000 of motor vehicle liability coverage, and God forbid you have an at-fault accident, and the injuries are catastrophic, or somebody is a fatality, whatever it might be, you might be facing $1 million or $2 million of liability. You can purchase umbrella cover. It's still going to have a limit, but maybe you decide, all right, I need $1 million on top just in case. So you get yourself $1 million umbrella policy. It sits over a bunch of different underlying coverages. Umbrella coverages are what we call manuscript coverages, meaning no two are the same. If you get one from Allstate, or you get one from State Farm, or you get one from Brethren, whoever you get it from, they're going to be different from one company to the next. So you have to consult with your producer, make sure that you have the appropriate underlying coverage, and that you understand what the attachment points are for that umbrella to kick in. The umbrella, this is a common misnomer or mistaken concept about umbrella. It's not a property coverage for you. So if you've got your farmhouse on the same package where you've got all these liability coverages, you also have your property covered, your umbrella coverage is not going to help you above and beyond the coverage limit that you have for the farmhouse if it burns down. It's a liability product, but it's really, it's a great way to supplement your insurance package, because you can buy that higher level of coverage at a much lower premium than you buy the primary coverage. So real good question there, Ryan.
No, yeah, and thank you for that. I just wanted to make sure, because I wasn't sure if I had heard it.
VJ's asking a question, and typically, so because they're manuscript, these umbrella policies can they can be different from one company to the next. Typically, they're only going to sit on top of the underlying cover that you have purchased, so your motor vehicle, your premises, your general. If there is a, this is what we call drop-down coverage for an umbrella. If there's a benefit in your umbrella policy that drops down, it's going to do one of two things. It might drop down to $1, meaning it's like a new primary coverage, or it's going to drop down to what's called an attachment point that you can kind of think of as a deductible, or what we call a SIR, a self-insured retention. So if you had a drop down coverage, maybe it drops down over like something $50,000 attachment point. But typically you're going to assume, VJ, that your umbrella should should attach where your underlying primary coverage benefits run out. And you're going to want to talk to your insurance producer if you think there's another coverage, if you've got a coverage gap that you perceive.
Yeah, no, great question. Is there any other questions anybody wanted to ask over? If they wanted to unmute themselves really quick, by all means, feel free. We are hitting that 1 hour mark. But Robert, just wanted to say thank you again and appreciate it. We will be, this is a recorded webinar, so we will be sharing this with everyone afterwards. And we'll be sharing Robert's contact information as well. So if you ever want to give him a call or reach out to him, I'm sure he'd be happy to answer. That's what he's here for. So again, I don't think we have any other questions, Robert. So thank you for your time and your presentation.
Yeah, that's great, Ryan. Thank you all. Just to echo what Ryan said there at the end, it's really what we're here for. So if you've got questions about anything in the insurance space, if I'm not the right, just send it to me. If I'm not the right person, we have a great team of individuals and units here. We'll get it in the hands of the right people. We'll get you an answer. We'll do it promptly.
Yeah, no, thank you very much, Robert. Thank you everyone for your time this afternoon. We appreciate it, and we hope you have a great rest of the week and afternoon, and take care. Be safe out there.